Welcome, everyone. I'm just going to jump right into where we find not just ourselves in this conference, but in the month of March, dive into some of the numbers, because it is March Madness. There's a lot going on. And on your platform, you guys have now consistently topped some big marks. So 3 billion in weekly volumes in weeks. Last week,
I didn't know that, actually. Holy shit.
Sports was the largest category on Kalshi. It was 2.7 billion in trading volume. That made up 80% of all trading volume. I think that we could probably point to March Madness for that. The second largest category, crypto, 285 million. Economics, 18. So, and financials, it's barely reaching 10 million. So I want to start with this question. Given all of that context, these numbers, I want to talk, we can begin with sports, given that there's such a prominent and growing interest from that category. But I also want to spend some time hearing from you guys about where you think the other categories can go, what potential you see for other areas in the future.
Yeah, I think it's unquestionable that sports is very big interest and like great volume for us. But it's interesting because when in 2024, when we had the election market, it was very much dominated by the elections. And a lot of the thinking was, okay, prediction markets are only about elections and that's it. And then when we launched sports, then the narrative moves. And for us, it's always about kind of like what's in the news at the time just gets the most volume. So for example, of course, right now with March Madness, sports is a big percentage of the volume. But if you even look like on the weeks of the Oscars, it was like sports was already like way below 70%. And I think a lot of the other categories with some of the push that we're doing for the institutional side, launching block trades, for example, we're going to see a big growth in the economic side. We're working for getting margin with the CFTC, which is going to be a very big increase in volume in a lot of the other categories like economics and politics and all of that. And I think that at the end, what we want to do is allow people to trade on any future event. Of course, no war, terrorism, assassination, those bad things we'll never do, but we want to allow people to take positions and get exposure to any future events. And there's so many events in the world that are very interesting that I think that sports will be a small piece of the pie very soon.
Maybe I'll make one more point. So I think that there's a few things underlying the data that are very important. So in the 3 billion number, and this is honestly something we didn't really expect, so sports is bigger than it's ever been right now, which is, we're talking about bigger than peak NFL, which is, was something that was really hard to beat. But it's also a lower percentage than it's ever been right now. Yeah. And that's a very key sort of metric. So you're talking about a category that's absolutely seeing astronomical growth, like the type of growth that honestly we haven't seen in any product outside of AI, or even most of AI. I mean, there's maybe a few AI companies that go. But then you have the other category that's actually growing faster than sports.
Which categories are you seeing?
We're seeing it in like politics, and financials, and crypto, and culture. So when you look at the underlying metrics in those categories, the volume retention, like the volume cohorts. So when we see users coming into the platforms, those other categories are showing incredible signs of acceleration. And this is the sort of key point, and one of the sort of things that Kalshi obviously has been pursuing. I mean, prediction markets are very hard to build. Right? Like, a lot of you here have probably thought, Luan and I were not sort of the geniuses that came up with the idea of prediction markets, right? There were actual geniuses that came well before us that came up with the idea. I mean, we're going to have Robin Hanson here. There's a lot of people that have been thinking about these markets for a while. But to get to sort of this level of critical mass, it required what I would call like some sort of like brute force. Yeah, like a catalyst, a strong catalyst. There's election and in some sense sports. But then we're seeing all the kind of metrics of like this idea of liquidity begets liquidity. Now you're getting more investment in the ecosystem from larger institutions, from because the profit pool is larger. And for me, it's inevitable that fast forward a few years, like 1 or 2 years, sports is a much smaller percentage of.
So that's what I want to focus on is what are some of the catalysts. Luana, you mentioned, let's dig into some of the subjects that you brought up, block margining. Yep. Can you talk through what those processes are, where you're at today, and where you think those different metrics, these levers that you're pulling on, are going to impact some of the categories that we're talking about?
Absolutely. And I wanted to add something I didn't mention before, which is there's a big difference between volume and number of users. And we actually track number of traders, and we actually track both of them, and we almost focus more on the number of traders because we think that's a kind of a very important signal of what's going to grow or the interest is. Because there's a lot of these categories that are new, so you see these early kind of insights, and we're seeing a lot of the other categories are getting actually more traders than sports. So it's
Which categories are you
So
seeing?
an example is like entertainment is one of them, and cryptos are the ones that are growing the number of traders a lot.
Culture.
Culture, yeah. And in terms of the kind of, the way that we think about our product roadmap is always about, we need to broaden the set of markets of topics that people can trade on. But there's a lot of innovation and things that we're working on the market structure side and the margining side. And the market structure side is like, not necessarily the best way to trade future events is a binary yes/no contract, right? Like if you're thinking about inflation and you're a fund trying to hedge a very big increase on inflation, picking a specific bucket of like 3 to 3.1 is not necessarily the best way to really hedge that exposure. But the risk is massive, right? So when we talk to a lot of the funds, they're like, we need to hedge payroll risk. But it's very hard to do that with the structure that we have. So a lot of our work that we're going to be releasing in the next couple of weeks is actually about exploring new structures to hedge these risks. And then when we talk about hedging, we talk about way higher notional volume and all of that. So block trades is, for example, you're able to negotiate very large size of orders outside of the order book so that it's a lot easier to kind of negotiate and get these things through. A lot of different market structure things.
And where are you with block trades, and who are you targeting? What kind of use case are you either already seeing, or are you hoping to bring in, is it new customers that are currently not active?
Yeah, so block trades are live on the platform, but you need to be an ECP to trade on it. So you need to be kind of an institution to do it. And a lot of what we're targeting is actually these institutions. So we're getting like smaller hedge funds that need to hedge, for example, 20 to 30. Right now, a trade that we're seeing a lot is a $20 to $30 million range of payroll hedging. And that's what we're going to start seeing really with blocks and going from there.
So where do you see that specific hedging case looking in a year from now?
I think we take a step back. So the way that we always thought about this, so when we think about building Kalshi, a lot of you might know this at this point, it's everything in Arabic. So we want to build this this idea of we want to price all the risks that we face, all the questions that we have interest in. And historically, the way that we price those questions is like, I don't know, you can watch TV and hear someone say something or listen to a tweet. That's most of what we have, the gauge that we have. When you think about pricing these things, that's the first layer to build liquidity in these markets, right? And okay, like when I was at Goldman in 2016, I always tell a story, like we're pricing the Trump election, whether he was going to win or not, through traditional markets. And the Trump trade was, hey, like put on a hedge on the S&P, like short the S&P, because obviously if Trump wins, the S&P is going to go down. That was a terrible trade. The S&P that actually went up. But the challenge was like, how do you price these things? Like, what is the benchmark? We have a benchmark for S&P, and the fact that you can average the 500 stocks and you get the price benchmark. You have now a benchmark thanks to ICE in crude oil. We have a benchmark for all these other things that people trade. But we don't have a benchmark for who's going to win an election. Will TikTok get banned? Will tariffs come back or not? Will a Supreme Court decision go one way or the other? And the key thing about getting that benchmark is a lot of the traders are in this room. And what we realized, and I think one of the early insights is like, and also, it's not really a Kalshi insight. I mean, a lot of you have read Tetlock's work and others. It's like this idea that there is a skill, the skill of super forecasting, and some people have it, and if you figure out a way, some way, any way, to bring these people into a room, into a platform, and get them to invest time, resources, and energy, at the beginning it could be a hobby, then a part-time job, then a full-time job, to price different things, they will actually be incredibly accurate. And that scale is translatable. It could be predicting the inflation. It could be predicting jobs. It could be predicting TikTok being banned. It could be predicting Timothée Chalamet getting wrecked at the Oscars. It could be sports. And a lot of the super forecasting skills is translatable. And I think we feel lucky in many ways. And it took it took 7-8 years. It's 7-8 years in the making where we are in this unique position now where that community is here, and they're pricing things and they're investing resources and talking to a bunch of traders, like, some of them is still a kind of part-time job. Others are like starting funds, and that's, I just talked to two people, like they're right there. They were doctors before, and now they're doing this full time, and they're crushing it. And because we have price benchmarks for like now thousands of questions, and some of them are better than others, we can now, when two counterparties come around and say, hey, we want to transact, on question X, it could be anything, what price should we transact at? And now there's a pricing. And that pricing, this is where this community comes into play. This community that is not intrinsically Wall Street. It's not starting from Wall Street. Wall Street will follow. And is now, I think now we're going to see this acceleration of like institutions, now that there is a price benchmark, to start transacting around those questions.
Is that when Wall Street follows? And if
Yes.
so, how do those two worlds then converge? How do you see it working together?
So one way that we're also seeing is, for example, when you're talking about a larger transaction between institutions, what they do is that they look at the market price that is driven by a lot of our amazing traders at a smaller scale to transact at actually like hundreds of millions of dollars of notional volume. So I think that a lot of what we're seeing is exactly kind of like this interplay of the price basing side of prediction markets and the kind of information aggregation with the actual like risk transfer and risk mitigation, right? What you need the price basing and the information aggregation is actually that you can do the risk transfer in a good way. And we've always, as prediction markets got to where they are now, the focus has always been the information aggregation, but it got to such a good scale, and it's so clear from all the papers that they're coming out on the value of this data. Now all of this value is going to be really starting to be used on the risk transfer.
So if you have the pricing, and really what it sounds like is that you're then looking to boost the liquidity and have so that these big block orders can move.
Yeah.
So what do you need in order to get to that point?
Yeah.
And what will that look like, and how will it impact the current model?
So I think there's like kind of like, so institutional, I mean, honestly, a lot of things about building this is really hard. None of this is like easy, but the institutional adoption is hard. And the reason is because, one, they're generally not first movers. Like, you know, they do a lot of, like institutions do a lot of opportunity cost calculus, right? It's like, well, I can invest resources in this other thing where if I do 10% better, I can make another $1 billion this year or something. Or I can like take a shot on this net new asset class. So it takes time to convince them that this is actually worth it. That's like already there's sort of that threshold. I think that we're there. I think that first pillar, people now are convinced. You were at FIA, you saw the energy around. The institutions are looking into ways to getting there. Then there's kind of two other sort of pieces. One is margin and risk. Like I think institutions are very aware of the cost of capital. So right now, if you want to put on a hedge on some presidential candidate, J.D. Vance, AOC, Gavin winning the election, you have to put $100. Like if you want to put a $100 hedge, you have to put $100 in the clearinghouse. That's too expensive for an institution. A Citadel, Millennium wouldn't do this. And so that's one of the things that Luan and Tim are like really working on, figuring out how to improve the margining capabilities of the exchange, of our clearinghouse, to enable like more capital efficiency for institutions.
And when can we expect that?
Soon. And then the step number 3, which is, I think of, you know, it's like penetrating the kind of organization. And so, you know, different, you know, a lot of times there's like politics and who's doing what.
Right.
And our initial strategy, which I think has been working very effectively, is get the data in. Get people using the data, do it for free. And we're seeing it with Bloomberg. I mean, we're seeing this with, you know, our partnership with TradeWeb. And both will be here later, and we should ask them these questions. And then I think once people get used to the data, which is very valuable, like, you know, we saw this Fed paper a few weeks ago about how Kalshi is the most accurate thing to forecast the economy. You're going to start saying, well, okay, now these risk prices, like these prices around all these different risks are going to my models to price S&P, to price home prices, any of the traditional assets. Now could I do something about it? And, you know, so you see this sort of layered approach, like use the data, integrate and finish all the compliance. Like there's a lot of compliance involved in integration, and then start putting off and laying off risk. And I think different institutions will be in different stages of this. We have a few that are in the 3rd stage, a lot that are in the first stage, and then, you know, a decent chunk that is in the 2nd stage. So I think 2026, 2027 will be a big 24 month for this.
Do you think that a year from now, we won't be talking in this way of like the divide between what currently exists and institutional interest? Do you think that it will be actual use case that we're talking about? And
Yeah.
if so, I'm also interested in this hedging aspect. So where are you, even if there's a liquidity problem and that these firms are waiting for margining to change so that they can actually, the calculation will work for them. What kind of use cases have you been talking to institutions about that you think, when things are off the ground, could actually come into play?
Yeah, actually a great example of this, there are a lot of institutions we talked to, it clicked for them on Trump's Liberation Day, the tariff day. that I think there was a lot of like different forecasts of like what's Trump going to say, what does that mean, which tariffs or whatever. But you see the impact that there was in the market, right? So a lot of the institutions that they come to us, they're like, there was no way for us to prepare for what was happening. We cared about a very specific country or a very specific industry and all those things, and there was just no way for us to hedge that. And at the time, we had all these contracts on tariffs, and they were like, at a minimum, we could have looked at your exchange, and we didn't. And in the future, we need to be looking at our tail risks a lot more. And if there is a forecast of like 30% some tariff is going to happen, they're able to take a position and really kind of hedge their risk. So it's obviously the economic side of like payrolls, and everyone knows they move markets. But the amount of things that happen in politics that moves markets as well, as like bills passing, for example, crypto and market structure and what's going to happen with that bill. We're seeing a lot of interest there. Of course, there's some of the capital kind of allocation efficiency that we need to figure out in that sense. But a lot of the institutions are excited about this. And the whole point is like, the market is the best forecast about the future, but if you're trying to protect yourself and hedge something, actually you're not necessarily trying to beat the market, right? That's not what you're trying to do. So we're going to see a lot more kind of activity and even like growth of the entire pie, because as people come in to hedge, there's going to be more kind of like spread for other folks to make, and the whole platform is going to grow a lot.
So do you think that some of the other categories that we were talking about earlier will then percentage-wise take up more of the bigger pie?
Yeah, I mean, politics is the obvious one that's like going to just like grow. I mean, I think by mid-27, like having a position on the election will not be, like a unusual thing for an institution to have. And why? Because the alternative is pretty bad. Like the demand is there, right? The demand to hedge one party or the other taking over is very clear, very well defined. And right now, people do it via proxies. And there is a better product now, right? I think there really, really is a better product. Or maybe there is close to a better product, assuming that we figure out some of the leverage and the compliance, like all the kind of infrastructure and mechanical things that need to be figured out. But I think we're quite close.
So I also want to ask about just the landscape, given that there are many platforms at this point that are developing at the same time. And so you're competing, and I'm curious how you view what you're building, who you're going after, and how you differentiate yourself in this competitive landscape.
I mean, it's a little bit like how it played out in AI, or it's playing out in AI. And I mean, it's a big market that is just sort of gone into the mainstream, and it's in very early innings. And so, from our perspective, it's like please build more companies in the space. Hopefully, there's more and more competition, because that will accelerate the investments that are required from the larger players, right? Like, if there's one player in an ecosystem, then a bank is going to be like, well, that's exciting, but let's wait and see. If there's like 20, it's much more exciting for a bank to invest in the space, and like you see the excitement. And you saw this in crypto as well, right? Like, an industry doesn't become an industry with one player. That's impossible. You need multiple players. You need multiple players bumping against each other, pushing each other, partnering, competing. And we're seeing this with us. Robinhood is obviously Poly offshore. We'll see what they'll do in the U.S. The bigger exchanges. That's one part that we're excited about. In my conversation with Terry or Dina, like, please come to the space, do more. And because they're going to come in with new interesting ideas. They have a lot of infrastructure as well that can accelerate institutional adoption. So we expect more competition in this space. We hope for more competition in this space. And generally, if the space is as big as we believe it's going to be, I think everybody's going to be a net winner for a long period of time.
But to add here, since we started the company back at MIT 7 years ago at this point, it's always been about the exact same thing for us. It's always been about, we want to make prediction markets and trading on event contracts as big as it is with crypto and bonds and stocks and all of that. And we want everyone from Goldman Sachs to someone that uses Robinhood to be using and trading these contracts. And for us, we've never pivoted. We've never kind of went this is our company and this is what our mission is and what we're trying to build. So it's excited to see more people coming into the space, but it doesn't change at all kind of the direction that we're going, and we think we can take the entire space. I think we're pretty solid, very, very solid on the retail side, and I think we have the right to win on the institutional side, and I think that at the end, the exchanges, there are kind of winners for categories, and I think we're very well positioned to be that.
So I want to shift back to sports because given that right now that's where a lot of the momentum is coming from, you're also facing a lot of pushback from the states. You have support from the CFTC at the federal level. I would love to hear an update on both the conversations you're having with regulators. Do you think that support is going to be a key factor here in the debate with the states? And I'm also curious, given that you're right now temporary banned in Nevada, you're facing criminal charges in Arizona, how is that impacting your business and how are you moving forward, given that, again, the numbers I pointed out earlier, the majority of the volume is in sports that are basically that's what the states are fighting over right now?
Well, the impact on the business has been, mostly positive. It just keeps growing. But it's like free press, basically. But more seriously, look, I think my mental model, we did not expect this. I think that, and I always go back, I talked to Alfred, who's on our board from Sequoia, how many, kind of run through the kind of consumer companies that got to critical mass and really got mainstream scale, and how was their sort of policy regulatory journey, and it was always bumpy. It was always bumpy. When Uber got to that sort of critical mass, it was kind of complete sort of mayhem with the states, and the taxi law became extremely hard after them, and then Airbnb was the same thing with the hotel lobby, and AI now has all sorts of other issues, with the sort of NIMBY problem and all these other things that are going on. And look, I think we have actually organized opposition to this industry. There is a lobby that is organized, that is very a legacy institutionalized lobby that is spending, that is seeding articles, that is, doing the usual stuff in DC, because there is a feeling of threat, and that lobby is a casino lobby. But that's okay. I think that's just par for the course. I think what we are very focused on is look, Kalshi is always regulatory first approach, right? There are many, as you said, we're not the only players in the space. We're actually not the only one that started a while back. There was us and Poly and a few others. There was Augur back in the day, et cetera. What we did differently is regulatory first. Work with the government, figure out how to get this regulated, establish the right set of guardrails, and make sure there's market integrity in what we build. And we're going to keep being focused on that. There's nothing different. Federal preemption does apply here. There's going to be people that will disagree, and we'll let the courts decide. But in the meantime, we'll just keep building product. And I think, this issue started a year ago, and we've grown a lot since these issues started. I think we expect more bumpiness in the short term, but we're pretty confident in sort of where the long term lands, which is, there's the legal stuff, we're very confident there, but the more important thing is we have to ask the question of at the end of the day, why are people using these products? Why are people coming to prediction markets, and why do they think it's superior? The same way they asked at the time, why are people using Uber, right? And it was because faster, it was cheaper, it was more convenient. And the reason why they're coming to prediction markets is because it is fair, it is more transparent, and it's more liquid. And, and people don't like necessarily the traditional, and there's obviously the elephant in the room, is this gambling, is this not gambling? And for us, the line has been always clear. I don't think gambling is defined by the act of speculation, because if we define gambling by the act of speculation, then let's cancel it all, right? The entire thing should not be existing. The derivatives market should not. But no, it should exist, and I strongly kind of oppose that view, because there is some parts of this that is economical, and there's the forecasting aspect of it. But then there's also the mechanism. The mechanism is very, very important. The gambling business is a business whose revenues, whose business model solely dependent on its customers' losses, right? If, Catherine, you're a great informed user that is actually seeking information in the world, that's doing the work, you will get banned in those products. That's what happened. They will limit you, because that's not what the product is designed to do. The product is designed to figure out who the losers are, who the people that are, may have don't want to do any informed trading, don't want to spend time getting research, and then figure out how to get them hooked. That's just a very different structure and mechanism than an open market where people are trading against each other, and where our incentive is figuring out how to make it, our incentive is basically be as neutral, as fair, as transparent as possible, so people basically know what they're doing, and people keep doing more research. We want to incentivize people to do more research, because the forecasts get more accurate.
Luana, where do you hope that this argument ends up? Does it need to reach the Supreme Court level to basically move forward, or is this something that, are you focused on other avenues?
That's a good question. Well, I hope it's all over today. And I think realistically, we're going to have to wait to see some of the states spin out. I think that it's going to have We're going to get more information on when the appeals courts start coming out with their decisions. Of course, we're very, very confident on our legal analysis and all the legal work, and we've been winning a lot of very good opinions on our side in a lot of the court battles. But I think we're going to have to see how the appeals court go. If it needs to go to the Supreme Court, it can go to the Supreme Court. We're pretty, very, very confident that we're correct, and there's no problem with that. And we're no strangers to like lawsuits either, right? We had to sue the CFTC to get the election market through, and the election markets now, if you look from the mayor of New York, Mondani, to Trump, to a lot of people in Congress, that just the data from these markets is used by literally everyone. And now it's pretty clear. A year and a half ago, people weren't that sure about is this market a good thing or not, is the data good or not. Waited a year and a half, now you're seeing everyone using this. And I think it's just part of the course for a business like ours and innovation like ours. And as Tarek said, there's a lot of very well-funded adversaries to what we're doing, but, you know.
I mean, it's interesting because now you mentioned the election lawsuit, like when we were telling people we're going to sue the government and like, you know, to prove that like election markets should be legal, like, you know, even if you had asked prediction markets, the odds were really quite low. They were pretty dire. And we did it anyways because, you know, sometimes hard things are like, you know, like things are worth it or hard. And I think, you know, for us, that's just not like opinions or the political maneuvering and all this stuff is just not going to like deviate us from what we're building. Like we're just going to stay focused on it and like, you know, if we can avoid these issues, great. If we can't, then we're just going to take them on head on and keep going. So
you've also taken, in recent weeks, a more deliberate approach to how you're handling insider trading. And I think it was a few days ago that you announced a specific ban on athletes not being able to invest in their own sports, politicians with their own campaigns. I'm curious, given that you've also started releasing some more information when there is insider trading cases, that you've done the investigations and then release more details. Talk to me about, are there further steps that you think need to be taken? That's my first question. And also, when you go through these investigations, I know that specific ban for the athletes and politicians is supposed to prevent the insider trading before it happens. This is not after the fact. How do you handle a person that might be one step removed, but they are very direct and in the know? They just might not be that athlete. It could be, let's say, their trainer.
Yeah, I think that like a few things. So there's there's actually the measures that we're implementing, and then also educating people about the measures that exist. And then, you know, sometimes what we've realized over time is like the delta between what people think we're doing and what we're doing is actually quite large. People don't know that we have all these measures. And you know, it's on us to basically educate people about the existence of these measures and how they work. So this one specifically is like we've always banned, for example, politicians from trading on things they have control over, athletes from trading on their own leagues. We've actually gone a step further from traditional markets. So in the stock market, you don't get banned proactively, like before trade. You usually, like if you are found post-trade, you get punished. We're actually going before trade, and we added a bunch of things in our systems where like we can actually flag someone who is at risk of potentially having insider information or ability to kind of control the outcome of the market, and then ban them beforehand. Now there is the interesting question of the cousin. You know, I bucket that question into sort of like, well, what about the cousin or the friend of the cousin? You know, that is a problem in the stock market, right? That is a problem in traditional commodities market. That's a problem in any market, right? There will always be bad actors, and no system of flagging bad actors is perfect, right? And to me, as always, you have to kind of like look at the standard that we're evaluating this against. If the standard is make sure to prevent any fraud or any sort of like cyber attack on your bank account, then what you should do is shut down the bank. Right? You cannot do that. There's no way to actually 100% guarantee there will never be any bad actor in the system. What you have to do is build, you know, heuristics that help you flag these things proactively or retroactively. Build a transparent system, which I think prediction markets are great in that regard, is that everything is transparent. Like a lot of you, when something looks weird in the data, either our surveillance staff or our compliance program sees it, or a lot of the users see it, the community sees it, or the press even sees it. And that's a good thing, because then you can see when someone cheats, and it's like really there for the naked eye. And the last thing is, when you do find, it's like the standard of detect and deter, when you do find someone doing something bad, punish heavily, right? And sometimes it can be fines, and our fines oftentimes are quite heavy. They could be 10x, 20x, like the initial trade size, not even the profit. and then it could go all the way to criminal prosecution. And I think you're going to see more and more of that, like you see in the stock market, and that's the system working as intended.
Yeah. Luana, you're overseeing a lot of this, so my question is, do you think that given the base level of what you guys have announced, is there further scrutiny and other measures that you can and you think should be put in place that could help in the future prevent even more cases?
That's a great question. And I think just to be crystal clear, like insider trading has always been banned on Kalshi. We're fully regulated. And on top of that, you can actually believe we do everything that now we're making public because we know everyone's name and address, and we have all their information and all of those things. And we have a team that is actually, I was saying, is like, I think it's 10 or 15% of the company is the team, the size of the team that actually is doing market surveillance and market integrity, that is looking at all these things in real time. I think that the matter of like how many more things, we can always do more things, and we are doing more and more things. But I think that like a lot of the focus on insider trading right now is a comparison between us and unregulated players when you actually don't even know who's trading. If you don't know who's trading, it's impossible to know if there's insider trading because you don't know who the people are. But the whole point about having regulation and safe systems is that you're actually able to know who everyone is, you're able to do investigations, and obviously as the market grows, we need to buff up, like increase people in that staff, put more time into all the kind of engineering systems and machine learning that we use to detect these things. We have a lot clearer. And the other thing is, like Tarek mentioned, that like insider trading is if you have material non-public information, you can't trade, and that's a legal standard. Like that's illegal and you cannot do. We go above and beyond that. We actually have trading prohibitions on top of it. So even if you don't have like a legal like signed agreement that you cannot release some sort of information, if you're part of our trading prohibitions, which are very, very extensive, you're also violating the rules of the exchange. So we can go above and beyond there too.
Have you ramped up and got more information about the users to know more definitively who they are?
Yes, absolutely. And the other side of it as well, we are doing it also asking the user, but also on the back end, we're doing a lot more of getting information from the user under investigation through the internet. We know exactly who they work, like where they work, what they do, who they're, like we can get a lot more information from them from a lot of the systems that we're building. And a lot of our work actually is obviously on this integrity and market surveillance side. The other side is customer protection, that we're putting a lot of time in it with regards to things like deposit limits, self-exclusion deposits, to make sure the consumer protection is a lot better. And you know, we mentioned the kind of proximity to gambling and the casinos, the like us, and I know that we're at time, but one fun fact that I always think is interesting is that they attack us on consumer protection, saying that we have worse consumer protection. But if you're excluded, self-excluded from a casino, there's only one state in the US that actually prohibits the casino to market to you if you're self-excluded. And you'd imagine that self-excluded means you can't keep marketing to that person, and they keep marketing. If you drive across state line, you can trade. So it's just a lot of like, there's a lot of money on the other side lobbying and spreading misinformation about these markets and finding any type of attack that's possible. But the reality is like, we're very, very committed to market integrity surveillance and also customer protection. We have a way better model for both of them. And I think it's just a matter of, you know, keep doing what we're doing and we'll get there.
We are out of time, so I just want to leave with one final question, which is, this is your first research conference. So in many ways, this is the established base. A year from now, where do you hope both the types of customers, the types of attendees will be? What do you think is going to be the makeup of your company? Big predictions for a year from now.
So, I mean, there'll be more people with suits. Some of them with ties, maybe even. But I mean, look, I think it's sort of a natural sort of evolution. I think the early adopters, and you know, then we cross the chasm, and then goes mainstream like we just did, and now it's sort of like really accelerating the institutional adoption on Kalshi. So a year from now, I think you will be talking a lot of the questions that we're asking will be a lot more practical, like what were the sizes of the trades, what is it looking like, you know, how is it being traded? And so I think a year from now, I think you'll see a much kind of broader aperture for what Kalshi is. But you know, for Kalshi research specifically, I think really, and Nicole will talk about this, and we'll see a lot of panelists, like it really will be a lot about surfacing as much as possible about what we're learning about the predictability of markets. And why do they work? How does information aggregation happen? How does belief aggregation happen? And who are the traders? Like what makes a great super forecaster? How could you become one? And how it works. So we're very, very excited about where the direction this is headed. Kalshi Research is an amazing project.
Yep. Awesome. I mean, I'm excited about, I mean, the other point that I would say is like, I think that when I talk to a lot of our traders now, they're so happy where the platform is because a lot of them just can make so much more money. They're able to like now do this versus other jobs and all of that. And I think that a lot of what excites us is actually bringing more and more opportunity and more flow for these traders to trade against and get opportunity to take hedging flow and all those things that we're very excited for. So I hope the same traders that are here today will be here next year, but even happier. And yeah, I think we'll be hopefully a lot bigger than now. We're hoping I think, way over 100 billion annualized. So we're hoping for at least 500 by the end of the year. So we'll see.
Okay, that's the prediction that we're going to leave for the rest of the morning, and we'll kick off the rest of the event.
Right.
Thank you,
Thanks,
guys.
Emma.
Thank you
everyone.
so much. Thank you.